The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN. Don't forget, you can watch 9 hours of live trader commentary each and every day at TFNN.com, at Tiger TV. Also, you can listen to us on your mobile phone anywhere in the world at TFNN.mobi. All right, so putting those pieces together, let's put everything together on the market. Let's look at the markets around the world here and see what's going on. We got the U.S. indices. The S&P right now is up about half a point. NASDAQ up 18. The Russell is up 4 right now. Dow moving on down 72 points on the day. Gold's currently down about 10 points on the day, with silver down 2%. So big move there on silver. We got copper. It's up about almost 0.25% at the moment. So not a big move there. Looking on at oil, it's up about 42 cents on the day. We got natural gas up over 1.5%. Corn is down just a couple ticks. We got soybeans. It's flying down 2.5%, down 34 points right now on the day. We got euro dollar down just a mere 7 pips. We got pound dollar up 38. Looking at the Aussie dollar, we got the Aussie dollar right now is down 6 pips. We got the euro yen down 14. U.S. yen's flat. Pound yen's up 50 pips on the day. Dollar CAD's up 15, and dollar franc is up 5 pips on the day. All right, well, that gets us caught up just on where the markets are at. Let's check out things we need to be aware of for this week, and just get sort of the news trading pieces together of everything that's going on. This morning we had some earnings, of course, that came on out on several major stocks. The Verizon and the Dow. We also, as well, had Johnson & Johnson also in the Dow. So let's pull the Dow up, and let me get that on the chart over here for you. Share the screen on over, and we'll take a look at when these things started moving. So those announcements came out. We got some volume spikes happening as the earnings announcements are coming out at 7:25 right there on Verizon. And then another one, like I said, came out at 7:45 there over on Johnson & Johnson right there. So J&J. And just you want to be aware of this. You want to know when they're coming up. You want to know what market they do impact, and how basically just what were the results of the earnings. And there's a lot of sites. One of the sites I like to look at, I'll watch, is financialjuice.com. It streams a lot of very quick. Like, it pulls from a lot of different websites and just is constantly streaming stories. They'll have a little bit of unique content, but most of it's just unique stuff right there. And so you can sort of see the reactions, because there's a lot in, and when earnings come out, you got the wire that comes out, but then you have the press conference, you have the forwards guidance. You have, even if they were positive, where did that positive come from? It's all those different pieces come into play. And it's just to make you aware, okay? You got to trade the chart when it comes to fundamentals, period. You got to trade the charts. But just, again, to make you aware of, what's going on. I mean, this morning, Verizon was, a bit above its earnings on certain expectations. They talked about they're going to go in and do an acquisition on Intel Media. They recovered from a massive, $8 billion loss. So, it did really good. But, again, you always got to follow the charts, because ultimately that's what's going to, move everything. Like Johnson & Johnson, they came in. They actually, did better. They beat their earnings expectations, but they had a sort of a pretty poor outlook, or modest outlook, for 2014. And so that weighed on it, which, of course, also weighed on the Dow. And we saw the Dow just, go on down, hammer down, it hit that gap fill, which is, the market opening, moved on down, filled the gap, and just kept on going. It went down pretty much to -1 deviations. And when it was at that level, it bounced right off of it. So right at that level. So that's where, when it comes down to that, one deviation level, definitely be looking to tighten those stops. When it comes to the minus one deviation level, like a minus 1.0 deviation level, definitely be looking to trail your stops. Probably not looking to add on more short trades. It's a good chance this thing's going to pop around and go back the other way or go flat. And so, time to basically just, take the money. And then also you saw a massive volume spike happening right there around 11:15 and 11:15, 11:30. So right there you get this big spike that pops up on the volume. When that spike happens, people are taking their profits. Okay, the big boys are getting out. And when it happens at a one deviation level, they're really taking their profits. So you combine a volume spike with a deviation level, you got a definite either chop or reversal trade about to happen. And you no longer should continue in that direction. At best, if you are going to stay in, you should be tightening your stops down. You've been glad you did because it pulled right back up. And again, that's exactly the pattern I would expect to happen when we get a big volume spike at a major deviation level like 1 or 2 or 3. A lot of times we don't get to 2 or 3 because it never gets there. But we get the 1 deviation levels, just about every day, at least high to low. And so, you always want to be watching for those and, be backing off of your trades whenever they happen. Because those are the most important volume spikes on an intraday basis, is volume spikes at deviations. Okay, so that sort of wraps up the Dow for us. Let's see, we got a couple other earnings announcements. We got another one coming up today. Okay, IBM is going to be releasing at the end of the day at 4:10, the wire release. We're not talking about the press conference, I'm talking about the wire release. So for you end-of-day traders, for those holding positions, etc., be aware that IBM is releasing at 4:10. The market will still be open and can move based on, depending upon how, if there's a big surprise in that report, better or worse. And then tomorrow morning on earnings, we got United Technologies coming on out. Okay, so we got UTX and also in the Dow as well. That one's the wire release is coming out at 6:30 in the morning tomorrow. And Thursday, we got several releases. We're going to have Procter & Gamble coming on out at 7 a.m. We're going to have in the Dow, we got McDonald's in the Dow coming out at 8 a.m. And then at 4:05, we're going to have Microsoft in the Dow and in the NASDAQ. That's coming out at 4:05 p.m. So again, another end of day, so like the IBM today. But the Microsoft one is in 2 indices, which means, obviously, as those shares are traded, that I could have a bigger impact because it's in more than one indice. Also in a lot of mutual funds, etc. So all these, of course, are in a lot of mutual funds. But being in 2 indices can have, can make the impact even larger. But anyways, just be aware of that. Want you to be, whether or not you're a news trader, you need to be aware of the news that is coming. You can't always be aware of the news that happened, of course. You can be watching it a lot of times. By the time you've seen it, it's already in the price on the bar. But just know when something's coming up so you can, hedge, tighten stops, maybe back off, whatever accordingly. So you're not trying to run out and all of a sudden you notice, oh, by the way, there's a bust that's about to hit me. So you want to know that that's there. Looking at our news announcements, pretty light week overall. The 2 decent announcements we have, and this one's not even huge. We got the Aussie dollar coming out tonight. It's the Aussie dollar CPI report, 7:30 is the release, and our expectation on the trade is about 50 pips. So it's a pretty small, on the straddles and strangles I post, a lot of times they're like 60, 70, 80, 90, 100 pips. 50 pips is as low as we go. But 75% of the time, it does break 50 pips within 2 hours, and the average move is 50 pips. So it does have the odds in its favor. And again, that comes out at 7:30, so you could be looking at the 8, 9, or 11 o'clock expirations on that trade. So be checking that out. You can get in as early as 6 on the 8, as early as 7 on the 9, and as early as 6 on the 11. So you can just be comparing those. Obviously, the more time, the better, as long as you're not paying too much for that time. The next trade that you're going to want to look at is going to be tomorrow morning. Bank of Canada is going to be releasing their interest rate statement at 10 a.m. Then at 10:30, they'll have the monetary policy report, and 11:15 they're going to have their press conference. So be looking at probably like the 11 or the 3 o'clock spreads or binaries, depending upon how which one you prefer to trade. I always look at spreads first, like I talked about last week. If you didn't check, if you didn't get a chance to listen to last week's shows, go through and listen to basically the last 2 weeks. I went through step by step and laid out how to do a straddle spread on news, how to determine if it's not only is the announcement acceptable, but is the pricing acceptable? Like, is this a good straddle to do? If it's too expensive, either I don't do it or I may do the opposite of this trade. And then I also, once I find the best straddle, then I'll go over and I'll look and go, is there a better binary strangle? A lot of times you'd think there's, but there isn't by the time you do all the calculations. And you end up like reverting to the spread anyway. But every once in a while you'll find, if there isn't a spread at all that's good priced or good, good placement, then you can go check out the binaries. And about the only time I consistently do binaries is one, there's just no spread. Like it's 40 ticks of risk on one side and 5 ticks on the other. There's just no way to straddle it at all on spreads because the market's moved since the spreads came out. Or two, the other reason would be, maybe I just don't like those spreads. Like I'm not big on the NASDAQ spreads or the silver spreads or the copper spreads over on Nadex just because of how big they tick. They do have a great purpose. They're great for newer traders with smaller accounts. And, you're not obviously going to, make a whole lot on them, but you're not going to lose a whole lot on them. You can go into risk 10 to make 10 type thing. But, they just tick really small. So they're not my favorite ones to do, but they do have, an advantage for a newer trader or a smaller trader as they're just getting their feet wet. But once you're past that point, you're probably not going to want to use those as much. You're going to hop into any of the other markets are just fine. You're going to hop into those markets, start checking them out. But so if it's on the NASDAQ, like I'm going to be looking at, if I'm going to do a strangle on it, like we'll talk about Google coming up here in a couple weeks, then I'll go in and I'll definitely be doing binaries on that because I'm not a big fan of the NASDAQ ones. So if I don't like the NASDAQ spreads, then I'll do the binary, NASDAQ spreads, or not binary NASDAQ trades, not the binary NASDAQ spreads. So I'll do one of the two, but I always revert to spreads unless no good spread or unless I don't like how the spreads trade on that specific instrument. Okay? But anyway, so those are really your two main reports. Something else just to be aware of. This is sort of having the news up on the side. And probably not having the bobbleheads talking, in the sense of like guys like reporting every little thing that comes out, but just looking at the headlines. That's why I like something like Financial Juice or whatever, just streaming headlines for me. Because WEF meetings are going to be happening, and that's the World Economic Forum.org. It's like weforum.org if you want to check it out. And over 90 countries participate, and they have the press is allowed in a lot of the meetings. But it has like central bankers and prime ministers and finance ministers and trade ministers and business leaders. And like I said, there's a lot of comments come out of the meeting, and that can cause some unforeseen volatility. So, we're coming off of a holiday today, which can make things a little weird anyway. But then we're going to have that WF thing going on, and it goes on for 4 days. It's Wednesday, Thursday, Friday, Saturday. So just be aware that meeting is there, and just some weird, non-usual moves can happen. And it's good to, have your ears, to the wall there and know what's, ears to the ground, whatever, and knows what's happening when it does happen. All right, stay right there. We'll be back right after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And we're just going through each one of the steps and talking about the news and things you need to look at. And I talked about how last week and a little bit the week before I went into this in detail, step by step for you, so you can go back and you can watch, those shows, and you can actually see, how did I put together a spread? How did I put together a straddle on a spread? How did I find if it was a good trade based on the movement that I expected? And where did I set my take profits? How did I calculate my break even if I decided I wanted to get out of the trade earlier? And then once I got all those put together, then, could I find a better binary based on that information? Yes or no? Sometimes it was worse. Sometimes it was the same. Well, if it's the same, a spread's always better because, you could easily break even versus lose, on the trade. So there's a lot of different, little pieces, but I walk through those step by step for you, and I don't want you to miss out on that. Now, if you're new and you're trying to figure out, what is this thing about, maybe you're wanting to go back and try some of this out, hop on over to TFNN.com. Right there on the home page, on the right side, you're going to see a banner that says Nadex, okay? So you'll see that little banner right there. Click on that, and then click on Trading and Demo Trading Account. Once you click on Demo Trading Account, fill in the information, and you're going to put in your username, your first name, your last name, your phone number, your email address, click Apply for Demo, and they'll send you a password. You'll be able to log in right away, and you can edit your account from there. One of the things I do recommend is that you change that password to a secure one that you'll remember. So, because in the email you probably won't remember it. And so as soon as you log in, just go to settings and then password, and then you can update that password. Okay, it makes it really easy, and that way you can log in on your live account, on your demo account. Once you get your live one done, do the same thing. And then you can also log in on your mobile browser. They have a Windows app, they have a Droid app, they have a iPhone app. I've tried all three of them out. They all work great. And so you can do this on the go as well as from your computer. But anyway, so get that set up, get that going. And then you can also click on Create Account, get a live account. The demo account will be good for a couple weeks. You can get that extended if you go apply for a live account. They'll add like a week if you open it up. But if you fund it, they'll add like another week if you make a trade. It doesn't matter if it's 100 contracts at $90 or a single contract at $3. If you make a trade, then you can call your Nadex rep up and they'll extend that demo for you for a year. So and then you can just obviously keep getting that extended, but as long as you're placing that trade. But just put that trade on, then you get a 1 year extension on it, so you can demo. Even if you're live trading, it's great to have demo. I demo stuff all the time. New ideas I come up with, because they're options, right? You have options, you have a lot of choices, and so I come up with a lot of ideas. And so you want to do your live ones in your live account. You want to test out stuff in your demo account and see how all the pieces come together. But the best way to learn, of course, the cheapest way to learn is demo, and that's how to get that demo extended. Also, you can check out our diagnostic trading product over here. You get access to our deviation levels, and you get access to the tutorials. You'll get access. The deviation levels, by the way, are updated every day at 8:15, and are very helpful. Whether you're a Nadex trader or not, they're very helpful. So, because we also post them on futures and forex and different markets. We'll be adding in more markets. It's one of our big steps is we're getting some of these other releases and little pieces put on. Then I'm going to direct my programmers to focus on getting all the stocks and everything built in as well. But so we're adding in quite a bit to this. And, that might be something to go over today. We haven't went over deviation levels in quite a while. And some days, I scroll through every one of them. Other days, we sort of just fly past them. So, let's check out. Let's see, how are the deviations doing? How would they help you right now, real life, right? So as a trader, what would they be doing for you? Okay? And so right here on the Dow, we talked about this one. This was one that came at the beginning of the show. But one of the simplest methods that I teach is, let's say you take a short for, we can go into a lot of ways on taking a short, but it's for your trailing stops. So if I go short down here and I trail my stop, then every time it closes below a deviation level, like right there, it closes below the level, okay? Every time it closes below that deviation level, then I'll put my stop 5 ticks above it. Comes down, moves around a little bit, closes below this one, I'll move that one. Comes down over here, I still have it above this level, waiting for it to close below it. Right there, it closes below it. Move it down. I'm able to maximize that short trade simply by using one simple stop method. It's objective, and it lets the market have room to breathe while helping you control, or not control, but so much take control of managing your profits. So profit management is just as important as risk management. Obviously, risk management is the most important, but profit management is one of those pieces that people often leave out. And so we'll go through a few different applications of the deviation levels when we get back. Stay right there.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, so welcome on back here to the Diagnostic Trading Hour. And just checking some things out, and we're looking through the deviation levels right now. And what we're talking about is, some of the things that they can be used for, like very accurately used for on a day-to-day basis. One of those is using them for a simple trailing stop method. So, and I went over, it's pretty simple. It's actually really simple. Just looking over here, you could be using 5-minute bars, 10-minute bars. Often, honestly, I'm using 10-minute bars. That's usually my favorite, bar size to use, but 5 or 10. Whatever your preference is there. And really looking for a close below the deviation level. So, right here it closes below the deviation level. We move down the stop to 5 ticks above. And that's real important there. Give it some room to breathe, okay? So it moves down, moves up, closes below it, move it to 5 ticks above. Moves down, moves up, closes below it, move it to 5 ticks above, right there. Okay, so very simple trailing stop method. Also take, high note when that happens at a deviation levels. Often it will turn into either a sideways or reversal market, as you can see here. Once that stop finally got hit on this bar, this thing has flown on back up. Okay, so what does that tell you? That tells you that's actually a potential entry trading system just on the diagnostic deviation levels. So not only have a trailing stop, now you have an entry. If this is your entry, where would your stop be? Well, put it 5 ticks below the bar you got in on. And then look at 5 ticks above the bar that closed above the level. Move it on up. It keeps going up right now. Let's go ahead and just assume, and we got 4 minutes, but let's assume this bar does continue and closes up above that. Then we move it up again. We keep trailing that stop up. So it's a very, very simple, again, this is just a futures trading system, forex trading system, stock trading system, whatever. Obviously you can apply this to Nadex spreads. You can do this on Nadex binaries. So binaries you could do out of the money. You could do, in the money ones. If I was doing in the monies, I'd be trying to buy a strike like below the level where the spike happened. So right there, see, we had a volume spike. I usually use volume spikes at deviation levels for doing in the money, but you could easily do an out of the money. You could even do an out of the money scalp where you're going for, you're buying a $20 binary and going for $20 profit. Usually takes about a one strike move. So, which is somewhere between 10 and 20 ticks, actually between 5 and I guess 20 ticks depending upon the market you're looking at. But very, very simple method for you to go in and trail your stops. And if one of the things I've learned, if it's a really good trailing stop, often it's a good entry, okay, as well in the opposite direction. And so that gives you a very, very simple one. But there would be your trades. And you can follow these all the way. We can look at this, say, hey, the market was moving up, up, up. And we had a trailing stop, like up, down, up, down, up, down. Finally, right there. Didn't close above this 0.7, closed above the 0.1. Right here is where you actually would have got hit on that trailing stop, like in this bar, okay? So you got in there, you went short. You followed that short down. You trailed your stop each time. So you trailed it here. You trailed it right here when this bar closed up below the deviation levels. And then you trailed it again, right there. And then you got in on this one and you trailed it, and now you've trailed it again. Very, very simple. Just a simple long-short strategy, but using either 5 or 10-minute bars. 10-minute bars are going to be it's going to filter out some of the noise a little better for you, okay? But it can take a little more for it to close below that level. So sometimes you might want to have both. Just up to you. But just looking at simple 10 minutes, you can see how easy that system is. And I mean, you could get every indicator off the chart besides the deviation levels, just plotting those on there. Very simple. We go down. We can look at some of the other markets. Let's check out. Let's just say the yen. The yen had some good moves today. So we'll go and look at it. And notice here we're at deviation levels. By the way, volume spikes again, so you're not expecting after a one deviation high to low move. And that's a big thing I point out over and over and over again on the show. Is I say, don't just look at the one deviation move because it moved one deviation. It did that overnight. It did it last night. Right here, we had this move on up. But then, so we had that solid, basically about a 60 pip move there. But then it moved back down a full deviation. Okay. So on either one of those, I wouldn't be looking to continue my trade. I'd be looking to tighten my stops up when I move to deviation. I don't always have to. I will tell you, I said wait till the bar closes below the deviation. I would say that's true on every level except for a full deviation move. If it gets close, and it doesn't close above it, I'm going to tighten it. As an example, and I may give up a little bit, but I'd rather, in this case, I expect reversal so often. So right here, so this literally gets there, and even it touches, maybe close would be a good way to put it. If it touches the deviation level, but doesn't close above the one deviation level, or if it moves a deviation high to low, okay, and it touches that one deviation move, that's where I would tighten my stop. So instead of saying close, because how do you define close? And so that can be easily, a vague statement. Combining that very, very simple with if it touches a deviation move, tighten my stop. So over here, we got a move. We'll say we're going short. You just got to pick a direction eventually. Then we can say, okay, well, when was the last time it closed below? The last time it closed below was right here. So here's our long trade. We get in long. Moving up, moving up, moving up. Now, if you use that when it touches at a one deviation, because that's a full deviation move, okay, then you can tighten that stop on up right there. And then you're waiting for it to get hit. It does get hit pretty much here. And then you got your stop. I'd keep it above the deviation level. Waiting for it to come down. Okay, closes below right here. So we tighten our stop. Oscillates a little, closes below right there. We tighten our stop. Does a little oscillation, comes down. This is where I'd be very tempted. It didn't touch. I'd be tempted to do it. Comes down right here. Here it definitely touches. And it doesn't close below. I'm going to tighten it anyway. Okay, because it at least touched a 1 deviation high to low move. And then now it closes below it. I'm going to tighten it again. Okay, so right there, there's my stop on that trade. And now I need to, now I have 5 ticks above it. Okay, so 104.17, so 104.23, 22, 23. Okay, so we get in on this trade, out of the money and in the money, whatever you're doing. And now we're waiting on it. It's just oscillating right here. Okay, and finally it starts moving up. So if it gets back above that 0.5, remember I said chop or reversal. So this one we've had more of a chop. We haven't had a full reversal on yet. But it's moving on up. If it continues to move on up, then we'd be tightening our stop at the 0.5 deviation. We've already had a 1 deviation up and a 1 deviation down move on the day. So there's not a lot left. I'll have a decent expectation if it was like the deviation up, maybe the deviation back. But if I've moved 1 deviation up and 1 deviation down, I'm more likely expecting chop than I am reversal. Like, I'm not expecting 3 1 deviation moves, up, down in a single day. So it's just sort of putting together the thought process of how many orders are there in the market, because everybody between those levels has had an order filled. So if they had an order there, last night, this morning, they probably had their order already filled. So sort of buyers and sellers are running out at this point. We're also going into the lunch hour, or we've been in the lunch hour, so things quiet down as well. That's a big thing. About 11 o'clock, expect FX to slow down. It can go fast if there's news, but you want to play your normal expectations. And you want to account for your known events. So normal expectation around 11, 12 o'clock is going to slow down unless there's a expected known news event that could actually speed it up. Anyway, so moves up, moves down. That's an example right there on US yen. We can go over here and check out some other markets we could look at. Let's see. Let's look at gold. So on gold, pull that up. We've had a pretty big move on it today. So it's moving on down. We're waiting on it to close below a deviation level, or at least move a deviation. So here it closed below a deviation level, and it moved a deviation at the exact same time from high to low. So we tighten that level on up. Coming on down, and it closes below another deviation level, so we tighten it again. Okay. So we're short this trade from back here when the last one was tripped. We can go back and find that last one that was tripped. Let's see, let's find it. When it was moving up. And, okay, so it got tripped like right there. So right here is when we got tripped on this trade. So we're going short on it. Waiting on moves. We finally get to tighten here. We get to tighten here. It's still going. Okay, now we got another close below another deviation level. We tighten it again. Okay, here, moving. We're in profit. We're really not scared now. I mean, you don't want to give up profit, but we're in profit. It comes down. It touches. This is an entire half deviation, almost a 1 deviation move from here. So you could decide, it touched the deviation level, didn't close below it. It was a big bar. I'm going to go ahead and tighten it up. We also had some volume spikes. If you don't get hit on that, this one, it touches it again. You're like, okay, I can tighten that a little bit more. The disadvantage of tightening it up right here is you don't really have the... you may give up your profit if the thing just pops up and flies back down. But you've at least locked in your profit if it does get triggered. So that's your worst case. So right here, we have another deviation right there. Same bar. It keeps just hitting that level. It's almost like double, triple, bottom right there. Over and over again. And that's where I said maybe over on the 5-minute bars. And we'll look at them now with all these marks on them. Sometimes on those 5-minute bars, when you got those big bars and you're trying to figure out, did it close below it? You might find one that did. Like right there, see that? So see, this was the open and the close of the 10-minute bar. So we didn't actually get the close below it on the 10-minute. But on the 5-minute, when I'm looking at these big 10-minute bars, I'll go over and look and go, okay, is there a 5-minute bar that did close below? So we see there was one, basically the same height as that bar that we already have marked on anyway. And just a simple method to add on to that. And now it turns around. Whenever it trips our stop right there, so we get tripped, boom, we're in, we're long. Now we're waiting for it to close up. It does close up. Now we tighten our stop because it closed above the deviation level. And now that's done that, again, we're past the 11 o'clock. Okay, past 11 o'clock, we expect markets to slow down, to go more into a chop state. So we've also moved up a deviation, down a deviation and a half, actually a little bit more, almost 2 deviations now. And now we pulled back another like half deviation. This has been a big, massive move day. How much juice is left after 11 o'clock when that much movement has happened? Probably not that much. So you may want to back off. But if you did want to go in the trade, you'd be in it right now, and it literally, like right over here, and it literally is just oscillating on you. But it looks to me like the trend is, if anything, up. I'd say more sidewards than up at this point. But it looks like it's trending a little bit up on you. So I'd be careful on just, hopping in on a short trade right now. But notice all the stuff I'm talking about is like pre-11 o'clock, okay? That's where we're looking for our main entries, early morning up to about 11 a.m. That's the easy big moves for, hopping in, trailing the stop, stop hit, go the other way, trail the stop, 11, 12 o'clock comes around, okay, time to back off. Let's see. Let's check out. I know silver had some massive moves on it. We know we got some silver traders out there, and it flew like crazy. And it's sort of a crazy instrument to trade. If you ever try trading it, it can be rough. All right. So let's check it out. Let's start over here. Back out a little bit on the chart. Okay. So where we get in? So let's go. This first trend. I'm just trying to find beyond my normal entries that I have. We can take any one of these. So you just take, let's just say the early morning one, or you could say the 7 a.m. one, whatever. Anyways, we're in the trade. We'll say we take this one right here. Okay? So whatever system you use to determine long, short. And so I see the market's going short. All right, great. Waiting for a close below. It closes below. Instantly, I'm able to tighten my stop. Okay? And then now I'm able to tighten my stop again on this bar right here. And it pulls way back up against me. At a deviation level, though. And it goes back down, moves on down, and touches it. Now I can tighten it because it touches this next deviation. Goes on over here, pulls back up, pulls back down. Tighten it again. Okay? And then finally, it triggers that stop right here on this bar. And we're going. We're up, but not quite closing above, and we're really just oscillating. We're in profit, but we're just oscillating at this moment. Nothing's really happening. We're getting all these volume spikes. Obviously, the market's closed down on silver. Closed about 20 minutes ago in the open outcry section anyway. So, if we close down and we just trade, which I used to try to stick to open outcry hours. Over here, take this to 120, except for at night. So I'll break that rule at night, but not in the afternoon because there's just nobody there. So you got that. A lot of volume spikes happening right there at the end of the day, too. So a whole lot of just orders changing hands really fast. But so you can see that's, small profit on that second one. On the first one, now, of course, this requires you to be up bright and early in the morning. But if you were, not a bad trade. So catching a solid 20.1 down to about 19.8. So that's a big move in silver. So you'd like those profits. Anyways, very, very, probably one of the simplest methods I could ever teach you. Stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investor investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome back here to the Diagnostic Trading Hour. So that was a good look at silver. Let's check out oil. So oil, not as big of a move today as it often makes, but let's check it out and look at it on the deviation, see how they could help you out. And we've been pretty range-bound over here on oil. So we put some pieces together, and I'll give you the details on that. I got to update over to, let's see here. I'm on the wrong one. CL. I was like, what is going on there? So CL, and then we are on the March contract now. There we go. That looks a lot better. And I'm like, what's going on with my deviations? It's like roll over. So anyway, so it's pulling on up, and so the last time it closed below a deviation level was right here. Okay, so like any deviation level. You just want to find, where to start your trade at. So we could say this right over here is our stop. Okay. So we go over here, we follow it. Okay, so where is our entry? We get triggered on an entry right up here. And now we're waiting on it. It's moving up, moving up. Okay, closes above. We trail the stop. And I mean, you could join in on this at any time in a trade in another system. I'm just trying to go pure system here. And closes up above again. Trail the stop again. And then let's see, let's check it out. Closes below and above again, so we're going to trail that stop up again, right up here. Okay. And then finally, we're going to get triggered right over here. So yeah, you could say you have a short right there. Goes down below it. And that short goes down. It does not trigger anything. Market turns around on you. Okay, so where would that stop be on a short trigger? So on a short trigger, after that, you'd basically have a go long if the market went, let's see here, you have your stop 5 ticks above. So you're stopped out, so you actually don't, you just basically you get in, you get out pretty quick. You're waiting on an entry. You get the entry on that. There's an entry signal we get as well. So now we have a long trade. Again, this one we don't really have a great trailing stop because it was such a massive move bar right there. So it doesn't really help us yet. But then it pulls back down and closes back above. Now we can tighten that stop. And we get a small profit on the trade. So right, there, we get taken out of that one. We then go short on the trade. We got a stop right up here. And then we're going down and we're trailing our stops. Again, same way. Closes below a deviation level. So right there. And we're basically just watching the trade. Again, that's a small profit. Not a massive profit on this one. Unless you decided to tighten it even more. It's sort of hard to even find the close on that one. Let's see where that bar closed at. It closed at, what did we get on that? 94.62. Okay, it closed like right at the deviation level on that one. All right, so you got a small profit on that one. Anyways, and it triggered again later. Now this is now we're going later in the day. So how much do we expect, right? So we're going into chop. We're getting more of a chop thing happening later in the day. So usually not liking that, liking the morning trades. But we had a nice, early morning trade. So it's just a big mover last night. The market just went great. But then had a small little loss, but then 2 decent, wins right there, back to back this morning. So you don't get much simpler than simply using deviation lines and 10-minute bars. And so, go back, watch it out, check it out, sign up, get free access to deviation levels with the diagnostic scanner, and see if this can help you out. Let me know if you have any questions. Have a great day.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.